Welcome to Forex Investors Alliance. My name is Dylan. Thank you for joining us today. We will be discussing M and W fractal reversal patterns that occur in Forex. So before I jump into this video, I'd like to give a shout out to forexcommunity.online. This is a link you can open in a new tab, and when you click enter on the link, it will automatically direct you to our chat room with thousands of traders online coming together, sharing their analysis with each other. So thank you guys once again for joining. Also, ForexiaPRO.com is our advanced Forex educational platform. Also, you can find much more information on Forex Investors Alliance on our website as well. So, let's get right on into this video. Some of the characteristics we're going to be going over today will be the highs and the lows, the previous structure high and low, the second leg stop hunt to the high or the low, and the micro and macro. Now, we've gone over M and W reversal patterns before, but this video is going to be a little different. I'm just going to be commentating over previous data, and I'm going to be giving my perspective on the market, or my analysis and my reasoning to why I believe the market moves. So it will be interesting. I do have a different kind of analysis strategy, if you want to call it that, than a lot of other people. I don't use indicators or any of that mainstream stuff. So I started this video before, and it actually ended on me accidentally, so this is just the remains of it. But alright, here we can see the Euro US dollar. We're on the 15-minute chart. If we want to go to the 1 hour, we can zoom out and see it a little better for what it is, a very large uptrend at the moment. But we do have these periods of consolidation. For example, here marked in blue, as well as this consolidation period here, and here as well. And up here as well. So we can see the market will consolidate and then move into its next zone before consolidating once more and then moving into another zone. If you want to learn more about that, we have a video on zone hopping. Feel free to check that out. So, looking at the 15-minute chart, the 15-minute chart is what I use to trade intraday M and W formations. Like I said, they do form on micro and macro scales, so they do happen across all time frames, and the characteristics of them will be very similar throughout all time frames, if not the same. So let's start off right here. We can see the price came up from an uptrend and then hit a high, made a high at this point right here. This high was made New York session or maybe right before New York session. This is the low of the day, correct? So when was this low created? Well, we can notice if you've studied our videos in the past, you know that the market through Asian session about 85 to 95% of the time ranges in a consolidation area, a certain range of consolidation almost all the time. So we can see that range of consolidation, and then London session price broke out of that range. What does this do? What can we understand about this? Well, if we were retail traders, which we are, but we're not stupid, if we were trading breakouts, we would have sold this. This is a valid sell for a retail trader that trades breakouts. This is a channel here, and we can see that price broke out of this channel and closed outside of it. So anywhere in here is valid to sell. And actually this right here is the most valid place to sell for a retail trader, because it's apparently coming to the resistance right here. But you can see that's not the case. What happens is exactly this. The W formation forms. We can see it right here. W formation. In the characteristics, we talked about the highs and the lows. The W formation was formed at the low of the day. Okay? What we also notice is the breakout of consolidation here formed this low, and this low was not broken. But the second leg of the W, although it did not break the first leg, it did stop hunt. It stop hunted that first leg with a wick. You can see it right there. So, what happens right after it stop hunts with that wick? Well, first of all, what happens with this W formation? Why does it do that? Why does that stop hunt occur? Well, what we notice here is, let's say we're using support and resistance. Let's say this is a support line, correct? Price came down and bounced off of this support. Okay, we're using retail trader terms here. I do not use support and resistance. Disclaimer. Yeah, this is just for show purposes, to show you guys how retail traders think and how, you know, it's being used against them. Their own knowledge is being used against them. So this W formation forms on the support, right? But the support, you can see, is broken. This candle breaks under the support. It broke under the support. This candle actually closed below the support, but this candle closed the entire body completely below the support. So that is a massive confirmation to a lot of retail sellers to continue selling, because they think they don't see the W formation forming. What they see is that. And what happens is the W, remember I talked about the second leg, stop hunts. It stop hunts to the low, and then it comes back up. So it makes it look like, wow, that's a really bad W. But anyway, it makes it look like it's going to do this. It makes it look like price is going to continue downwards, because this was once one red bar all the way down here past this low. How many traders sold when price came below this low? Think about that. How many sellers are trapped right here? And don't tell me that you didn't learn this exact same crap, because I did too. Alright? I was in the same boat, you guys. How many of you guys would have sold here knowing that this, all this had occurred, and using your previous market knowledge? These are the old days, you guys. Welcome to the new era of information. So, the W formation is a trap. The second leg stop hunt to the low. We had the second leg stop hunt to the low. This is the trap. Right after that stop hunt to the low, what do you see happen? 1, 2, 3, 4, 5, 6, 7. 7 green bars straight up without one red bar in between. 7 green bars. On the 1 hour chart, whoops, I lost my chart now. I lost where I was. Alright, let's go back. Whew. Alright, you can see that 7 green bars on the 15-minute chart. Let's say you sold after seeing this stop hunt to the low. You sold here. There was this small consolidation period. But what, and more importantly, what time is this? This is London session. A lot of the retail traders and a lot of the liquidity, because this is how the market is set up, a lot of the retail traders in the United States go to sleep at this time. Go to sleep right after a move like this happens. They place their stop loss and they go to sleep. And then what happens? In their sleep, price completely moves against them and hits their stop loss. Alright. Now we talked about this W formation. Now what we can see is that price came back up and then formed a high of the day right here at 1.12637. So this high was then formed, creating what looks to be a new high of the week. Remember, because this is Sunday open right here. I don't know if I said that yet, but right here we can see that gap. This is Sunday open. So Sunday coming into Monday, Tuesday, and then Wednesday, Thursday, Friday. We can see basically this whole week was in consolidation. But what do we notice here happening the next day? So these blue lines that I have set up here, right? You can see them. These blue lines represent a new day. You can also see Asian consolidation inside of these, or at this time, at this changeover. This is when the Asian consolidation or Asian session starts. So, what do we notice happens once again? Asian session, they make that range. They define a range. The range is defined right here. And this is about a 23 pip range. What happens coming out of that range? London session. This one is a little different, but it's the same concept. Stop hunt, second leg, W formation. The second leg actually railroad tracks. It breaks out of the low, breaks below the low, and then comes back up, and then stop hunts the high of the day here with this wick, and also stop hunts the high of the previous day here, which is also the high of the week. Now this is happening London session, correct? Also, we talked about previous structure high and low. This is what I was talking about, the previous structure. This is the high of the previous day. It just so happens to be the high of the week as well. What happens next? Price comes up and in one candle breaks above the high of the day and the high of the week. The same concept that I talked about with the W formation, with it going like this, people thinking it's a continuation of the trend. The M formation is the exact same, just like this. So what did retail traders assume was going to happen here? What did they see? Well, we can see it here. We think that retail traders see price going up, continuing the uptrend, just because, well, number one, we are in an uptrend, and number two, because of the high here was broken. And remember, the retail traders, what they go by, as long as the market continues to create higher highs and higher lows, the market is still uptrending. So, a higher high was created. What happens? Upon breaking this high, breakout traders, remember, they start to buy. They start to buy this breakout. The same trap that happens with the W formation happens with the M formation. So we'll get that trap, second leg, and what we also see is, you may not have noticed it, but there's a macro M here, and the second leg of the macro M, I like to call it the M&M trade, has a micro M inside of it at the high of the day. the second leg inside of the M formation. So M's and W's, you guys, these are very, very powerful. Now, you will see M and W formations occur all the time, okay? For example, this M formation. M formations are supposed to drop, right? According to me, according to what I'm teaching, why didn't this M drop? It's an M, right? Well, first of all, you have the timing totally off. Go over our previous video on M and W formations and make sure you know when they happen, okay? If you're having trouble with the timing, then wait for a previous structure M or W. Now this was very, very easy. This M formation, you can see a previous structure high here, the high of the week, and so you didn't even have to look at the clock to understand what session it was. You could have just taken this second leg M as a sell, seeing this macro M and this previous structure high, and this M formation at that previous structure high. So the M and W formations only occur at lows and highs. Those are the only ones that are valid. Okay, M and W formations will happen all over your charts all the time, and a lot of times they will happen Asian session. Mostly, you can see Asian session here consists of basically a bunch of W's, M's, W, M. But what do we see? It's consolidation. It's not London session or New York session. Okay, that's the one most important thing, you guys, is timing. Second leg stop hunt to the higher low, New York or London session, opening or right before the opening of New York and London session. So, if we sold the second leg here, price comes down and then ends the day in consolidation, Asian session, like we talk about. Okay, all the time. This happens all the time, you guys. What's next? Well, after that consolidation, what do we know happens next? Breakout to the low or the high London session. What do we see? Come breakout London session to the high, and then you could have considered this a second leg M formation and sold. Now that's a little strange of an M. I don't know if I would have personally sold that at the time, but what you can see is price did come down to the low and stop hunted the low to create that W formation here, giving us that perfect opportunity to buy. Now, what else do we see? This W formation happened at the low of the previous day. So the previous structure low, okay, remember this is the previous day, and so this would be the low, the absolute low of the previous day, if this is the close of that day. So this is the low of that previous day. Let's mark it as the low. We can see the low was worked Asian session, and then would we have bought this? No, because that's Asian session. We wait for the breakout London or New York session. Now I'm not sure if, I know this breakout came London session, and then this one I'm pretty sure came New York session, and then you can see that after trapping that second leg, what do we know happens next? A shift of that zone. A completely new trend is created. Okay. Whew. All right. So, moving on to the next day. Now, the next day didn't have such a defined consolidation area. It was somewhat defined here for a little bit, and then the breakout occurred. The breakout of the consolidation occurred, and then what we can see is that second leg stop hunt to the high created that M formation. There was also a second leg stop hunt, railroad track confirmation, candle stick pattern, and then price sinks, drops to the low. What do we see happen next? That low was formed, and then that W formation formed, that second leg, but it did not exactly stop hunt all the way past the low. It did stop hunt to the low, not quite exactly to the low, but it did go just about to the low. Now, you wouldn't have bought into this W formation just because it's too close. You were already in Asian session here, but that W formation did happen. But you can see Asian session consolidation occurred, and then that one candle breakout of Asian session. And then if you guys have not looked over our previous videos, we have a previous video on confirming entry candlestick patterns. This is a confirming entry, the stop hunt to the low, breakout of the consolidation Asian session, and then the star formation that we have here. That little candlestick here is I don't know if they call it a morning or evening star, but I just call it a star formation. So what we see then is you could have bought all the way up to the high, and then this stop hunt to the high M formation, come back down to the low, create that W formation, end the day in consolidation, and then start the new day in consolidation. Oops. Alright, so hopefully you guys are taking notes on this, learning as much as you can. Now here, this wasn't such a volatile movement, but nonetheless it was that M formation at the high of the day, and then came off and dropped. Another one here. Now what will sometimes occur is Asian session will gap or move like this but it'll move very, very fast. It'll move just like this, in 2 or 3 bars, a very heavy movement. For example, this was like a 20 or 30 pip, about a 25 pip shift in the zone, in 2 candles. So it'll shift the zone and then consolidate. If it doesn't consolidate right away, if it starts to move, if price starts to move Asian session, just wait a little bit for the consolidation period to show itself. Because the consolidation period is probably the most important period to understand here, because this is how we understand how the retail traders are reacting to price. So now here we can see, if you go back into our videos on our channel, we have a video called Our Signature Trade. Here's a perfect example. A W formation, wedge breakout, second leg of the W to the low. Now, this is a little bit sketchy just because there's 2 confirming entry candlestick patterns here. I'm sure on the 1-minute chart or on a smaller time frame even, this is a W formation here. And then what do you see? 1, 2, 3, 4, 5, 6, 7, 8. 8 continuous green candles. And then boom. Okay, this was a 70 maximum 90 pip trade. If you caught that second leg W formation, breakout of Asian session with the wedge and the second leg stop hunt to the low. We can see the high was then created and worked off of. And what we can see also is the Asian consolidation range. Starts up once more. Now what you guys can also see is I'm not really changing the size of this consolidation box. The consolidation is almost always the same size. So Forex is a lot easier once you see it for what it actually is, and not using all these indicators and all this other junk that is just there to confuse you and get you to not be aware of what's actually going on. Here we can see the continuation of Asian session. The one candlestick, like I talk about, breakout to the low, and then that candlestick formation of the confirming entry here. This is London session as well, right before London session or right at London session. And then price comes straight back up. So that breakout of consolidation, enticing retail traders to sell. Once they set that retail trader trap here, that's when they shift the zone, and then they come back to that zone. But notice that they don't go into the trap because they have liquidity trapped in there and they can't set the liquidity free. So they come back to that zone but do not enter it. They come back to the zone because retail traders see this as a bounce off of support or resistance. So they see resistance here, and then they see this as a even better time to sell. And what do? They start selling all up in here. They start adding to their sells because they sold here. They start adding to their sells. Well, it came up. I can get a better entry, right? You've done that before. I know you have. I have. Don't lie. Come on. All right. Price shoots up after trapping for a peak of about 85 pips. Then creates that high of the day, and then works off of that high of the day. Here's the consolidation. Here's that breakout, and then the M formation right here, double railroad track. M formation at the high of the day. You can see the wicks. What does that look like? That looks like a break to the high and a continuation, right? But it's not. It's a trap. It's a trap! Don't fall for it, you guys. Do not fall for it anymore. You don't have any excuses. Not anymore, you don't. Not after today's lesson. Alright, we know the trap has been set. What must happen? Drag them into negative drawdown. Blow their accounts. All the above. And then what do we see happen here? Well, this low was formed, the low of the day here. And then the next day, we can see Asian session was spent in a very tight consolidation range. In one candle, we have the breakout to the low of the day and to the low of the previous day. One candle, remember? This is the trap to induce retail traders to sell, and then boom. Either that was a news event or just who knows. But the patterns, news is just a influencer of these patterns, you guys. So news just helps these patterns complete themselves. The trap at the low of the day W formation, and then a 79 pip rise. That one candle alone was a 62 pip spike up to the upside. Alright, I think you guys understand where I'm coming from now. I don't want this video to be super long, but I mean, I guess I will do this last part here. We can see a high was created after this week. What we can see here is Friday. Friday, if you have studied our material, Friday and Sunday are trap days most of the time. They connect. Friday connects to Sunday, and Sunday connects to Friday. They connect each other. Now, this high was created, and what we can see here is it was also the high of the week. This is a new week here. We can see that gap. This is Sunday going into Monday, Tuesday, Wednesday. Wednesday, we can see, is when they finally, have that. Wednesday here is obviously when the most news event happens, when most of the news events occur. What do we see happen for these news events? The news events spike into the low, and into the high and grab all this liquidity, you guys. That's what's happening. It's grabbing money. The market, or whoever's behind it, is grabbing liquidity from the highs and the lows. So constantly widening the range until shifting to the next zone. So this high was worked and worked and worked for liquidity, and then one last time it was tapped for liquidity at that news event, and then the consolidation occurred, the market cooled down, and then we can see the shift out of that zone. So yeah, that was basically my commentary for today, you guys. I don't want to make this video super long. Hopefully this helped you expand your awareness and expand your knowledge on trading in general. Trading, like I said, this works on all pairs. This is just an example on the 15-minute time frame. It also works on the hour, the 4-hour. It works on all time frames. The concept is the same. Just remember that obviously the timing is going to be different. Is going to differ from the 15-minute to the 4-hour chart, for example. So thank you guys for tuning in. If you enjoyed, if you learned anything in this video, feel free to subscribe, like the video, share with your friends. Peace out.